Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to see the complete journal entries of excise duty or tax. What we will learn that we will see what is excise duty tax. We will see the journal entries of each and every step of excise duty or tax, and we will see the recording in accounting books that I will show you the ledgers that where we are recording our excise duty or tax values. So let's start with the beginning and we will define the excise tax first. The excise tax is a tax which is be liable on some specific goods like fuel, like diesel, like air tickets, tobacco, alcohol. The government authorities are deciding on what type of goods we need to collect the excise duty or the tax. Usually excise duty or the tax is paid by the businesses like wholesalers, like the producers, the manufacturers. They are paying this duty. When they are buying raw material from out of the country or from inside the country, they are paying this excise duty. Or when they are buying like finished goods, like a wholesaler buying a finished goods from a manufacturer, he is paying the excise duty or tax to the manufacturer, and after that the manufacturer is paying that tax to the government. So this is the exercise of excise duty and tax. Let's see what are the journal entries. The journal entries for now, we will move on. Excise duty input on purchase, like the journal entry purchases or inventory. We are buying a raw material, that is our asset. Even though if we are buying locally finished goods, that will be our purchases. In the balance sheet as a current asset will be debit by 1000. There is an excise duty or tax input will be which is 20%. That is also recorded in the balance sheet as a current asset on the debit side with 200. Now the credit will be supplier. If we are buying on credit basis, the supplier will be our current liability under the balance sheet will be 1200, or either bank or cash account, which are our assets, they will be credit by 1200. So from these two accounts, one account will be credit. So here raw material or finished goods purchased and recorded as excise duty tax input account as debit. We have paid the duty to the government while we were importing on the customs clearance time, and here if we buy the locally, then we have paid this much money to the manufacturer. Now let's move on and see the excise duty tax output on sales. Here we are selling goods on credit, then our debtor account, which is under the balance sheet current asset, will be debit by the total value. Or the bank or the cash, if we have received the funds on by bank or cash, then that is also our assets, which will be 1400. So sales amount, which is under the profit and loss as a revenue, which will be credited by 2000, is our sales value. And if you charge the 20% excise tax, which is 400, that will be as a output as a current liability, which is payable to the manufacturer by the wholesaler or the retailer. If the retailer is making these sales, then he is paying to the wholesaler because he is buying from the wholesaler. If wholesaler is making this entry, then he is going to pay this money to the manufacturer. He is collecting from the retailer and paying to the manufacturer. So sold goods to retail by a wholesaler. So next entry we will see now that what are the ledger accounts now for the taxes, like the tax input in our accounting books, like narration, example data. When we were buying raw material or finished goods, then the 200 was debit, and here we have ending balance of input tax, which is debit under the current asset. And here excise duty tax output, which we have received while we were making sales, so that is credit 400. So the ending balance of this ledger is 400. So these are the ledger balances after making these one transaction and this the second transaction. So this is the complete picture of the ledger balances. Even though if you have thousands of transactions, the ending balance of the input will be debit and the ending balance of the output will be credit for the excise duty and tax ledgers. Now let's move further, and we need to close these when we are making like a quarterly payment to the government. So we need to move further and close these ledger accounts. So when we need to close these ledger accounts, we need to create an additional account which is net excise duty or tax account, which is our current liability and which will be payable to the government. So when we are going to close our input account, so that will be credit and the net excise duty tax account liability will be debit with 200. After that, when we are going to close our excise duty output account, then in the beginning we made that credit. You see here it is credit. Now here when we are going to close this account, we need to make that account 0, so we will make here that account debit. Excise duty tax output will be debit with 400. Now we will move further and see the excise duty tax net excise duty tax account. Here when we close the input tax account, we make it as debit here, and output tax account we make it as credit. So the ending balance, which is 200, which is liable to the government. Now we are going to pay to the government this amount. So what will be the journal entry? So net excise duty tax account will be debit by 200 because we are decreasing our liability. Here as you can see here, this is our liability 200. Okay, so this is we are going to pay to the government, and cash or through bank we are paying to the government. So our balance sheet current asset will decrease while making payment to the government as an excise duty or tax. So this is the concept of excise duty tax and the complete journal entries, guys. If you find any difficulty in understanding, please do comment. I will try my best to solve your problem. Thank you very much and goodbye.